Alrighty, let's go ahead and get started. Welcome everyone to the HUBB Live Trading Room. Great to be back with you all during this trading day and during trading hours. First and foremost, as always, we do have to cover our disclosure disclaimer agreement. The main thing to take away from this, is that we're not licensed investment advisors in the United States, so nothing to be taken as personal investment advice. This is always available on our website to be read in full detail at your leisure, or feel free to take a screenshot of it now if you like, but that's the main point to take away. Headlines today with Powell finding his way back in those headlines of the Fed releasing its latest interest rate to come on Wednesday, and it's not yet compiled with subpoenas as the Powell probe, rather, they're calling it, continues. So interested to hear Rob's thoughts on that, amongst many other topics, and of course, very excited to interact with you all. So let's kick off. Rob, how you doing?
Good, Zach. How are you? Happy Wednesday, everybody. Appreciate you being here. Hopefully you're having a good hump day, if you will. Used to hear that term all the time for Wednesdays, but we don't seem to talk about that anymore. It's just funny how trends change. Um, Wanted to comment on what you just said. Yeah, well, it's not really a big Fed meeting today. As far as nobody expects any sort of rate change, likely going to stay status quo. And I just think that Chairman Powell is not looking forward to the press conference following this Fed announcement, because I'm sure he's worried that he's going to get barraged by questions regarding the lawsuit, et cetera. And people are going to be more interested in that than monetary policy, I think, today. But anyway, I don't think it's going to be. Oftentimes, we've talked about this in the past. This is getting off subject of the AI stuff, but where there's normally a very fast intraday fade trade to be made on Fed days. They come out, say whatever they're going to say, and the market spikes. At least the futures do, in a very short-term basis. And then you let that spike play out, and if you're quick enough, you can fade it back down, because it still follows the rule, even on a 3-minute chart, if you will, on that retracement back to the 10-day moving average. I know a lot of our subscribers have heard me talk about that and have partaked in that. It just seems to happen extremely consistently, that first initial move gets retraced. I'm not sure that's going to happen today, because there really isn't a whole lot of thought on the Fed doing anything or making any statements that'll move the markets. So might not be as volatile of a Fed day as what I'm trying to say today. And all eyes are going to be on the Q&A afterwards with the press conference. And then when we get to, I'm going to show the bonds real quick, make some comments. Rick Santelli, who's really good on currencies, he's the guy that reports what the auction results are in bonds and treasuries. So I'll save that for a moment. Let's get to looking at the chart of the S&P. And for right now, you can see that we are breaking above that 690 level, putting some distance here. Looks like we're getting follow through. I had commented over the past couple of sessions this week, Monday and yesterday during Trade Finder, on the EWO event, when we talked about how I wasn't sure how much we could put into this breakout move. I got two comments to make here. First of all, with the weather, felt like Friday would be a very low, volatile day, because everybody was hunkering down, getting ready for the storm. Then the storm came through, and you've probably seen people were snowed in, iced in, which I haven't really heard that one before. But I've never lived up north, so this is as far north as I've ever been here in the Appalachian Mountains. But just felt like those were going to be low volume days, because a lot of traders just weren't going to brave the conditions to come in, and that's played out. You can see the volume here has been lower than where we've been for quite some time. So we did have low volume on Friday and Monday. I thought we might get a little more volume yesterday as people got back to work, but we didn't. Still stayed on low volume yesterday. So not sure if that meant that people still didn't want to venture out, or if we just are in a low volume environment. always makes you nervous when you break a major point of resistance on low volume. You'd rather see at least average volume. I don't want to see big volume spikes because if you break out a resistance on a huge volume spike, that likely doesn't hold either and it retraces. It kind of works the same way as if you break a resistance point when we're already overbought. Those tend not to hold and get retraced. But with that said, playing the other side, oftentimes new impulse moves, and you probably know this through Elliott Wave rules, etc. Oftentimes, new impulsive moves start on lower volume, and then as people start to realize, hey, we are breaking out, the volume comes in. So in that scenario, we would want to see volume kick in here pretty soon. This follow through here, we have taken out the highs from back here earlier in January. And then the other thing that I was talking about the previous 2 days is if we were able to make a new high, which we did today, we didn't yesterday, but we did today, would that 5 move over or could we relabel to a 3? The concern about this SPY chart here is the fact that the wave 4 only retraced 21%. That's a very weak wave 4 retracement. Elliott preferred it to be at least 30%. And obviously, the 38.2% fib level is an even stronger signal. But 30% was kind of what he wrote in his notes that he wanted to see. So we were quite a bit below that. And when you have a lower wave 4 retracement, you tend to get a smaller wave 5 extension. In other words, you don't often get a 20% wave 4 correction and then a 100% wave 5 extension. It usually doesn't work that way. So with that said, even though it does seem like we're getting follow through on the breakout, we still have to be a little bit cautious and pick our spots. And that's what we've been doing with AI alerts is just not, you know, you're seeing the signals, I'm sure, and there's been lots of results, and we've just picked a few here and there rather than let's put them all on and see what happens. I just don't think we're in that environment. I think you have to be a little more selective in the alerts that you pick, just based on the fact that a lower volume rise on a weak wave for retracement, we could pull back at any point in time. So just need to be careful about that, I think. And then when we look at the VIX, it's not really breaking down below that 15 level. We came down there, but we haven't broken below it yet. Perhaps we do. If the markets continue to break higher, we might be able to break that really strong barrier there, support level at 15 and start to drift down. As long as we hold here in the 15 area, and we're at 1685 at the moment, there's little volatility here that's still being held in to the market. And you would think if we're breaking above this major point of resistance with an expectation that we're going to go higher, the VIX would start coming down. So when you add all those things together, yes, we trade what the charts give us. That's what we do as technical traders because what we think is going to happen makes no difference at all. Market doesn't care what I think, doesn't care what anyone thinks. So we trade what the charts tell us, but yet we also have rules, the volume, et cetera, that I talked about. So, and then the concern of the weak wave 4 corrective move right here all plays into it. So the VIX isn't helping by staying with volatility being priced in for whatever reason. Could be all the geopolitical stuff, which those are concerns as well to keep in the back of our mind. More chatter about Iran and President Trump saying that if they have to intervene again, it'll be a stronger response than the last one with all the unrest there. So enough things still to keep us cautious. If we go look at the dollar, and jump into the dollar before I get to the bond market here, look at that move. That's concerning, especially when there is no expectation of another cut today. I talked about this way back in September of last year, and we joked about it during the insiders meeting. I don't want to lose the dollar. I kept saying that, and we've clearly broken out of this Goldilocks channel that we've been in for basically a year, other than a few small outliers. And then yesterday, when we were here, we had the doji, and then currencies trade all the time like um, cryptos do, but they all have a calendar rollover for end of day charting programs. This one's not just end of day, does update periodically throughout the day on the prices. But my comment yesterday was I didn't really want to see this wave five low taken out. And we take that low out, and then we can start to really have something of concern coming lower. Um, you can make an argument that, well, we've been down to 90 before and the market was okay. But my concern is we just don't want the rhetoric being passed around of other countries not wanting to hold the dollar, worried about our debt, and then you get a mass dumping of the currency and you get like a vacuum move lower. That would send shockwaves through the market, and that's not what we want to have to worry about. And with the other concerns, you add that on there, and we could get a move lower. Maybe this calms down because we are quite a bit below the 10-day moving average. I mentioned this, I think, both yesterday and today, or excuse me, Monday and Tuesday, on the 10-day rule, where people have been asking how far away from the 10-day moving average constitutes too far away, to where you get that retracement back to the 10-day moving average. Oh my goodness. My apologies. If you've been watching the last couple of webinars, you know I've been dealing with this dry throat, heat being on, but it's really cold without the heat on, but the heat dries out my throat. And so when I start rambling on for a while, just all of a sudden my throat says, that's it. I need more moisture. But back to the comments on the dollar here. And the 10-day moving average, there is no hard, fast percentage rule of, if you get X percent away from the 10-day moving average, that's too far and you're set up. Every security is different, and you have to look at where they are based on the 10-day moving average. So you look at the dollar, and you can see we rarely move very far away from the 10-day moving average. So where we are right now is quite a bit below the 10-day moving average. It's a bit more than normal. So maybe um, there's a slight amount. I apologize for the coughing. I know how annoying that is on your end. But if we don't get a rate cut, which is really the expectation, then maybe that gives a little bit of a bid back to the dollar, and we jump back. So with that, we're just going to have to wait and see this afternoon what happens. But this vertical move down so fast to the downside, to me, is concerning. So hopefully we snap back a bit. I don't know we're going to get all the way back into the Goldilocks channel for a while, but I just don't want to see the dollar go into free fall. That's always been the concern on the dollar going too far. And notice the difference between this move down in the dollar versus what happened back over here. Now, I know that there is some commentary. People have mentioned it. There was some commentary in the U.S. market update over the weekend of, well, it has to do with the yen, the yuan, with China and Japan intervening in their markets. Pretty much seems to do that. Our Treasury Secretary Bessent was just before we came live, saying that the U.S. is absolutely not intervening in the currency markets. That's not part of what's going on. So take it for what it's worth with his comments. But yeah, some of that is playing into these movements in the currency markets with what's going on with other currencies around the world. Um, strengthen their currencies and weakening ours, etc. But let's just watch this. We do have that last bastion of support down there at 90, as I was mentioning earlier. Spending a lot of time on the dollar. Hopefully that tells you how concerned I am about it. And maybe, we jump back up, but we labeled a wave three today. And yeah, all that worries me a bit moving forward. So getting back to the bond market, um, this doesn't make a lot of sense, does it? We got prices coming down again on TLT. Remember, prices and yields move inversely. This is the 20-year. So prices on the 20-year, if prices are going down, that means yields and rates are going up. That may only be because there isn't an expectation of a rate cut today. Maybe that's what's playing in here. And then if you looked at a positive view here, and then you can see we came down significantly on rates because TNX shows rates on the 10-year. So the rates came back down after the big bounce up at the beginning of last week after all the commentary about Greenland, et cetera, and the concerns of military action, which have been put to bed, and the tariffs have been basically put the high tariffs have been put to bed, and so the rates came right back down, and we're hovering here at the 420 level on the 10-year. And if you want some positive out of all this, because I feel like I've been a little bit negative or concerned, and I don't mean to be negative, but I am concerned. The positive here is if rates are coming down lower on the 10-year, going up on the 20-year, that is helping to steepen the yield curve. And when you have a steeper yield curve, that means a healthier economy. So there is a silver lining in there. It's not all bad, what's going on in the bond market. A little more concerned about the dollar, but at least in the meantime, going back to the chart of the dollar, this is going to be really helpful to earnings for companies with international exposure, which most of them do now, the global economy. You get the dollar coming down, and then they get the advantage of the currency exchange rate. So that's going to help next quarter's earnings. But we don't want to see the dollar go into free fall. That's it. I'll leave it at that, and we'll move on so we can get to the AI signals. I've spent quite a bit of time there. I did want to show the cues. Not really going to show much else in the markets so that we can get to the AI signals, and I can go through that. It just felt like that was enough of an issue to spend a little time, even in this HUBB Live Trading Room course. So with this move up here in the Qs, we had this big triangle. Talked about that. Tried to find a triangle that we could do, and we just wait and see what the direction is, because there wasn't one that I thought worked well enough, didn't fit within the risk parameters, wasn't optionable, etc. All the issues that come along with that. We'll keep an eye on this. Let's put volume underneath here. But see, this is, again, not the divergence that you want, or you have price moving up and volume moving down. We still have that caveat that oftentimes new impulsive moves start on lower volume. So it doesn't mean that this move can't hold. It just means volume needs to kick in the short term rather soon. That's all. All right, so that's enough of the rest of the stuff going on. Let's go take a look at the AI signals. Right off the top, we see IXC, and globally, there has most definitely been a rotation of money globally, some money going elsewhere other than just the US. And we've been seeing that with some of the signals. We had the Turkey. I might as well just show you that because when we put it on yesterday, took it off today. We had a gap up today in the chart, and you can see how vertical that move is. And you know how I feel about vertical moves. Now, this is better volume. See the volume down here? That's more like what we want to see going on in the U.S. market. Maybe some of the volume going overseas is affecting the volume in the U.S. markets. That would make sense. But this is really starting to get vertical here. That wasn't so bad there. But then when you add in the gap up today, that's pretty darn vertical. Yeah, AI signals higher. We didn't quite get there. Maybe we bailed a little bit too soon, but that's a pretty big gap up today and pretty vertical and some separation from the 10-day moving average. And I just felt like some backing and filling is likely here. We won't abandon this altogether. We'll watch, and if we do pull back and maybe go sideways for a couple days, it might give us another entry to catch the rest of the move up to the AI signal. But we had a chance to get 20% in one day. Usually the rule is if you can get 30% in 3 days or less, we're going to take that every time. Won't always take 20% in one day, but when you have that kind of a move, it just feels too vertical. And we may look at this tomorrow and have another big gap up day. We've certainly seen from gold and silver what can happen there, but I don't know that all the global markets are buying the Turkey ETF. But we do know that central banks around the world are buying gold and silver. So you have to take some of the ancillary things into account, and just didn't want to thumb our nose at 20% in a day and waiting around to see if we pulled back and gave it all back. We'll Monday morning quarterback it tomorrow, probably talk about it in the insiders meeting tomorrow night. We'll see in tomorrow's trade if it follows through with another big move higher. But as I said, if we back up just a little bit here or even go sideways and calm things down, we might re-enter this with a new alert to capture the rest of the move. So you're seeing a lot of these signals here on international stuff, which definitely tells you that there's a rotation going on. Notice that this one hasn't quite had that vertical move that Turkey had. It is an ascent that's a little more than 45 degrees, but it's not quite as vertical as Turkey was. So that's a difference here. And as I said, I usually, the vast majority of the time, I don't look at the signals on Wednesdays so that I can look at them with you and go through the thought process so that you can at least hear the way I look at things and take that into account for whatever it's worth when you're making your own determinations. We want to see the volume here. This is the Global Energy ETF. And on the February monthly contract, there really isn't much open interest. March the same, and then April. So there's really no open interest and mile-wide spreads. So there's really nothing that we can do with this on IXC, but it is interesting as it plays into that global rotation theme. And then Arch Rock here, not super familiar with this company, getting a little bit of a pullback with a high score here, a couple dollar move, still potential there, decent DMI, pretty strong actually. I've had a little bit of a pullback in the CCI, but it could be getting ready for another run. Money flows solid, not great, not weak, just kind of in the middle. So you could classify that as supportive. Let's see what the options look like here. And much better open interest here, as you can see. Still wide spreads when you get to the delta that we'd be looking at. It's interesting that with a lower dollar security here, there aren't dollar strikes available. That's a problem because you can see we go from an 87 delta down to a 24.5 delta on this because there's 5 points here and not dollar increments. This would be a lot easier to do something here if we had dollar increments. March, all of a sudden, the open interest dries up significantly, and same thing as far as the big jumps in the delta. We'll take a look at May, where we have a little bit more open interest again. Spreads a little bit wider, but you're going to have to do you can't really do this 40 delta. At least these deltas are a little closer because that's an 80-cent wide spread. That's way too wide for an option that trades with a bid of $1 and an ask of $1.80. But if you go up here in the money, you get to much better width of the spread, really solid open interest, lots of open interest there. And just to reiterate, I've mentioned this before, but just to reiterate, there are times when you do want to look in the money rather than the out of the money delta, the 25 to 30 delta that we've talked about so often for the delta gamma acceleration. When you have a small move forecast, remember, delta is what an option will make or lose on the next dollar the stock moves. Gamma doesn't kick in uh, until after that first dollar move. So if you're dealing with target that's a very small um, dollar move, like targets at 30.15, 28.30. So, we're looking at what, $1.85 here movement. So less than $2 movement forecast. That's when you can go in the money because we don't lose the delta gamma acceleration because there's not enough move for it to exist. It won't occur till you get into that second dollar of potential movement. So we can look at that and utilize that. Pretty good open interest. We may, um, I'll do a little more research on what this company is, and that may come out as an alert this afternoon. And then if we look at Gilead Services, boy, this has been a mixed bag for me over the years. Obviously, a big company. I've had a lot of success trading it. I've had some failures trading it. You're getting into the space where, we joke about don't do drugs, etc. It's in a space where anything can happen on a given day. We are getting a nice breakout from this triangle formation that we had here. So it's making a nice move, and it is a bit vertical, a little too much separation from the 10-day moving average for me today. But we are getting a backing and filling day today where we're going sideways. That's encouraging. And maybe we get one more. That would be ideal. But again, with these vertical volatile moves that we've been seeing, sometimes one day is all there is, and then it takes off again. These moves and the degree, literally the degree of their ascent has been pretty mind-boggling on some of these. So this one's quite interesting, and we can look at the options here. Barring anything unusual, it should be okay. It's got weekly options, so immediately that tells you that there's some liquidity in the options, or they wouldn't even have weeklies available. Probably would want to start looking at April options here. Down here at the 46 Delta, looks pretty good. A little bit outside the $500 list. And then you come down here and you've got pretty good open interest. Then we're going to add in the volume today. That'll get us over 100 contracts and reasonable spread, 55 cents, tiny bit higher than that 10% rule, but not undoable, not horrible. And a nice 35 Delta. That one looks pretty interesting as well. Just anytime you trade stocks in this space, I feel like you just have to kind of plug your nose a little bit. So take that into account if you see that alert come out. And then we drop under the 75 score. First Trust dividends are doing pretty well right now. So I find this interesting with the move to the upside here. There's been some rotation into dividend ETFs, which they've been really quiet for a while, as you can see, going back in time. There just hasn't been a lot of interest in them. Gosh, we got to go back all the way. We had sideways into April. We fell with everything else that fell during the first tariff tantrum. And even after that, not much of a move here over months and months. Basically just a dollar move here over a number of months, but it's breaking out now. And then we want to look at the DMI there, and that looks pretty solid on the DMI. So have no idea what the open interest is on some of these because they've been so out of favor for so long. People just haven't paid much attention to dividends. And then when you look at the options, the open interest is just not there. So we can move on from that. I did want to show you this. It's a little bit lower, but you can see what's going on in Brazil. And look at that DMI. Even though we're a little vertical here, we're a little separated from the 10-day moving average. And the problem is if you wait to see if we can get a backing and filling day or two with that DMI and that ascent, we could go all the way up to the target before we get some backing and filling. But it plays into the theme that I've been talking about as far as all this international stuff that's going on. It's where the action is. Even on some of these smaller countries like Turkey, you're seeing these kind of moves. But Brazil is quite interesting to me, and I wish there was a little less separation. We may send this one out as well, and just know that if it pulls back a day or two, probably an opportunity to add to it. Another way of trading these is whatever your risk tolerance is, whatever your amount of risk that you're willing to put in any one alert, regardless of what that is. It's different for everybody. We use $500 as a guideline, but you make that choice based on the size of your own account. A consideration is to put on a little smaller position, get in and participate in it, but perhaps not not a full risk complement there. And that way, if it pulls back, then you have some dry powder to add to it and look to move in and add and make a full position then. So that one I think is quite interesting. Even though it's below 75, I still find it really, really interesting. And then we have OII. We're getting a little bit lower on the score down to 71. I'm okay with anything at 70 or above, but our guideline is 75, so we try to stay there. And coming back to the 10-day moving average after being a little extended yesterday, depending whatever goes on in Iran could affect anything in this kind of space. So that's something to keep an eye on and be concerned about. Let's look at the bearish side of things. And when we look on the bearish side, we've had a few that are like this pretty much every day that have reasonable scores, just not high enough to do anything. And the ZAI lab, I'm not sure what they do. It's an ADR, so it's a foreign country that trades on the U.S. exchange. It is just kind of meandering its way down. It's got room to go from 1729 down to 14. And you look at that score and you say, but it's a flip of a coin at a 56% score. And one of the things that I've asked the data scientists is it okay to go a little bit lower on the score on the bearish side of things? Because oftentimes you see these bearish setups performing well with lower scores. But the data scientists say that you individual circumstances, individual situations can change things, but the data over the long term that they've analyzed shows that you still want to try to focus on the higher scores. So keep that in mind if you were ever interested in doing anything like that on one of the lower scores, maybe just to balance out the portfolio a bit and have some bearish things. Not a lot of open interest here, so this is probably not one that you'd want to do. Even down here at the 35 delta on the March option, the spread is still a mile wide, 60 cents by $1.40. So 280 contracts and still to have a spread that wide just shows it's not that liquid. That would be one of those that I've mentioned in the past where they can kind of suck you in, where they allow you to get in on splitting the spread, but then when you try to get out, they don't give you that same consideration on trading at the mid price. Getting out, they would want you to move closer to the bid, and then that likely takes all the profit away. And so you could be right on direction and not make any money, and we don't want to get involved in that. I expect this wave 5 bullish if we continue the breakout on both the S&P and the Q specifically to continue, I think you're going to see a whole long list of these wave 5 bullish uh, uh, results show up. I think there could be a lot of really interesting possibilities. This is one of them right here. This is the Mag 7 optimal income. I'm not exactly sure what the optical income means there. I would look at that one a little bit more, but I do like the way this Wave 5 was structured. You've heard me say I like symmetry in the options, and then I mean in the patterns, and that's true with zigzags and the 5-wave patterns, and that's really good. That was a well-structured, symmetrical 5-wave pattern right down to the middle of the tap box. We're moving back up. We are above the 10-day moving average, maybe a little resistance here from the 50-day. And when you look down at the DMI, this is the problem with the ADX when you go on these wave 5. I've talked about this before. When you look at the wave 5 buy searches, because you've had a downward move, you've been in a 5-wave pattern to the downside. Remember, the ADX is a lagging indicator. It takes a while to reset. It'll take a while for it to reveal that the downward pressure is over or the strength of the downward move is over for the ADX to come down. So pay a little more attention here on what's going on with the directional indicators. What you would like to see is at least a cross between the positive and negative directional indicators. But if you're going to wait for that ADX to cooperate like we normally talk about, the move will probably be over by the time that happens. So based on that, that's where, again, we bring in the CCI. And that's rather constructive at the moment. It's come all the way back to the midline here between 100 and minus 100. So interesting here on this one. So I'd want to see the open interest, and gosh, it was pretty interested in this one, but if we go out to April, we can get a little bit of open interest, but still the wide spreads, and that's frustrating because that looks like a good setup. And then you pair that with the breakout of the Qs, and if they continue, this one could really work. But it doesn't matter from an option standpoint if you can't make money on the options. It's a little bit of more, it's a dollar move. So we could go in the money if we had any open interest in there, and there isn't. So looking at April, you could go to the 12 strike. Hasn't traded, so they didn't put the delta in yet. If somebody trades it, that delta will show up, but you can expect that that's pretty far in the money with a 12 strike and the stock up at 14. So if, that's the risk there. Again, not much of a move, basically a flat out dollar move. So you could go in the money, but with an 80-cent spread and you've got an 80 delta, if you buy it at the mid price getting in and buy it at the mid price getting out, you're going to make about 80 cents. And then you just gave it all back on the trade. Does that make sense? You spent 40 cents getting in at the mid price and at least 40 cents getting out. There's your 80 cents. So we could go up and hit the target and you can't make any money off of it. So please remember that. Oftentimes, people that are newer to the world of options will talk about, manipulation, and it's difficult to make money in options because they manipulate the spreads. No, it's just the math. It's the Greeks. You got to understand how the Greeks work because there's no trickeration going on here, if you will. It's just the math, and it's right there to be seen getting in. So it's not like they're playing games once you're in. All right, with that, Zach, let's go ahead and open it up to the Q&A here for the last few minutes and get back to our trading day and see what the Fed has to say at 2 o'clock. You might be muted. I didn't hear you.
Apologies for that. I double muted myself.
Okay.
Happens, good for one of those a week. Got a couple of symbols for you from Alexandru. First one's going to be MU, Micron.
Yeah. Where the action is, you look at this nice move today, um, um, little below 70%, but gosh, with Micron being so much in the news, um, and you look at the uh, um, 100% extension here. My concern is that we've got an AI score below 70%, and we've got a zigzag extension, which clearly we went to today. We pegged at 161.8. So I wouldn't want to chase this one now in case that C wave extension holds. As I've mentioned before, we had a 50% B wave correction. That gives you 100% C wave expectation. In a wave three, oftentimes the C wave goes to the next fib level. So you get a further extended level to one more fib level. Well, we're there now. Maybe we go up and hit that AI target, but that means that we're getting past the point of where I would be comfortable with um, directional trade because it's satisfied already the zigzag and an extended level. Then you get into, well, can it extend more? Yeah, it could. It could go all the way up here to the 261.8% level, and it might do that, but it's a very small percentage of stocks that go to 261.8. It happens. I've talked about this numerous times in the past that I've seen them do it. They do it at times, but it's just a small percentage of the time. We've hit the higher percentage movement with this 161.8% level that was hit today. So Micron's been moving, but I would be careful about moving much further. And perhaps we got out of that one way too soon with that look. But yeah, I love the stock. I think it likely goes higher in the longer term, but maybe it needs to rest a little bit here in the short term. We'll see.
We'll follow that up with NVIDIA.
The shorts just came in and decided that they were going to stop that momentum in Nvidia. They just were basically going to stop the upward move that we had had. We got a little bit vertical here, and then we have one of those head and shoulders patterns that's concerning. We haven't broken the neckline though. And the head and shoulders pattern doesn't mean anything unless you break the neckline. Right now, it seems like with all of them, well, not all, but the major moving averages that I look at, 10, 30, and 50, all converging here, building this support level. Looks like we're trying to break above it. And then, you remember that Mag 7 ETF that we just looked at. Um, Perhaps we can move higher. You've got a five wave pattern labeled to the downside. That's a concern. But if we can break above this wave four, maybe that relabels. But there's still caution on NVIDIA until we break above this previous four, but we're almost there. So I think this one bears watching. We've got the big round number of 200 not too far away. Probably a pretty good chance that we go up there and hit that level. I think you keep a really close eye on NVIDIA. This is that risk to reward thing, aggressive versus conservative. If you're really aggressive, you could look at this and say, it looks like it's breaking out to me and finally ready to run. If you're a little more conservative, wait until the wave four actually gets broken.
Next up, we have James. Can you comment on the AI progress on TOST signal from December 3rd?
Let's take a look. Um, from December 3rd. So was it a downside signal?
Not sure on that one. Looks like, nope, there it is.
No, it's a wave five bullish signal on that one. Um, Today is concerning. I wouldn't have been worried about anything up till today. Oftentimes, you'll test the low to see if the stock is really ready to go to the upside. It was making a nice ascent following the signal, and then it got turned over. Um, we've got the 10-day moving average moving to the downside. And again, you know, hanging in there waiting to see if the 32.5 level holds would be okay. That wouldn't bother me at all. But the break today is a bit concerning. And if there's any sort of follow through tomorrow, then we could be coming down here, down to the midpoint, even below the fail zone on this one. So pretty concerned about that break today. Today's not a good day for that one. And wait and see if it can immediately jump back up tomorrow. It might. The wave five just wanted to come a little bit lower. It's getting close to the 78.6% level. But if you're long this, if you're in this one, tomorrow is key. You want it back above 32 and a half tomorrow. If not, then it probably makes sense to exit that one.
Thanks,
Or
Rob.
flip the script and go short. You can always do that as well.
Next up, we have a question from Maria. ACMR thoughts, please. A little overbought and ADX above 40, so a little cautious, but positive DMI going up and the CCI looks good. So how do you read the ADX and CCI here?
Well, I wish we had a better zigzag here on the way up to give us a more idea because it's really just drilled the target that the AI gave us around here around 55 here. It looks like maybe it's trying to go for another leg up, but the concern here, Maria, is this 10-day moving average, not so much the separation from the 10-day moving average, but the 10-day separating from the 50. So remember, those two work the same way. Just like I keep talking about, 10-day moving average, you're getting too separated from it. When you start to see big separation between the 10 and the 50, it also gives you a signal that we're getting overbought. And so if we go look at the DMI, it's holding in there pretty well above 40, and you do have the positive directional indicator moving up and the negative moving down. There might be a little more out of this one. The wave three is still green. But boy, I'd be really careful. So if you're in this one and you want to stay in it, just make sure you have tight stops and just let the market tell you when it's time to get out. The positive here is a pretty extended ADX above 50, as you noted, Maria, and it hasn't broken down like it's going to break back below 40, which, as you know, I'm sure that's the first sign that the move is over. So it's not giving us that yet, but yeah, money flow remains really consistent and solid. The CCI looks like it's building up. Maybe it wants to go one more. So it's not one I'd say, hey, just take your gains and go. This might have more room to run, but I would encourage you to have stops in place so that if it goes higher, you're taking advantage of it. And then if it reverses, the market takes you out, and then you lock in your gains. But I agree with you, Maria. It looks like it might have a little more to go, but it's getting extended. That 10-50 separation is what worries me the most.
Thanks, Rob. That actually covers all the questions for today's session. So back over to you.
Awesome. Well, Maria, I'll just continue on this one then, just to give you an idea of what I was talking about. See what happened back here. And usually these move I keep using the word symmetry, but there is a lot of symmetry to technical analysis. And see how we got up here, and then we got that separation between the 10 and the 50. You can see how they were widening and widening as we go here. And then we had a little bit of a dip back down, tried to make another leg higher, which it seems like the stock's trying to do right now. And then we came down and the 10-day came back to the 50. So that's what I'm worried about here. So there are signs that we could continue this move a little bit, but it's going to be limited, I feel, based on the separation here. So stay in it if you'd like and see if you can get a little more out of it, but don't risk, a big down day where all of a sudden the 10-day makes a quick sprint back towards the 50-day. All right, so, well, good. Appreciate that. It gives me time to get ready and get set up for the Fed announcement. And I don't know that I'll watch the news conference. I usually do, but I just feel like it's just going to be, badgering Chairman Powell on the lawsuit, et cetera, and all that kind of stuff. I will be anxious to see We'll probably get an update from the data scientist tomorrow night on the Fed liquidity chart. If I was in that audience, I would be asking, that's the one question I'd ask Chairman Powell, because we had a tick down last week. Try to get a sense from Chairman Powell if he is starting to play politics. They told us they were going to start injecting liquidity. They started doing it. And then last week they pulled some back out. Where do we stand on that aspect right now? That's the question that I would want to have answered from Chairman Powell today. So we'll see if anybody asks that, but oftentimes reporters don't ask the most critical questions, in my opinion. They all have their own motives on what they want to ask. So with that, thanks for spending some of your Wednesday afternoon with us. As always, we appreciate and value your time. And let's see what happens this afternoon. Gosh, I'm sorry. I wish they gave me some sort of a heads up when that was going to happen. Um, Borrowing a word from our Thursday night insiders meetings, this afternoon will be interesting. That's what I was going to say before I started coughing again. So thanks, and hopefully we'll be talking to y'all tomorrow night. Take care, everybody.